Hi, welcome to part 2 of our shared ownership series. So in video 1, we explained what shared ownership was and we talked through how essentially you buy part of a property and then you rent the other part. So if you haven't watched that video, I suggest that you do that before this one. And in this video, we're going to actually look at the specifics around who's eligible for shared ownership and how do you actually go about getting a shared ownership property. So let's talk about eligibility. Well, in order to be able to get a shared ownership property, because they're not available to everybody, the whole point of the scheme is that it's intended to help those who might otherwise find it too challenging to save for a deposit for a whole property. So with that in mind, who's eligible? Well, you either need to be a first-time buyer, or you need to be somebody who already owns a shared ownership property but wants to move, or you need to be somebody who used to own a property but got rid of that one and now can no longer afford to buy another one. So you have to fall into one of those 3 categories. And then there's like a financial limit on it as well. So your household income, so that's basically you and anyone else that you're buying with, needs to earn less than £80,000 combined if you're outside of London, or £90,000 if you're in London. So unfortunately, if you do earn more or you're not within one of those 3 categories, then you're not going to be able to do shared ownership. If you're not sure, then you can speak to a help to buy agent to double check your eligibility. So assuming that you think you're eligible, how do you actually go about getting a shared ownership property? Well, it's not the case that shared ownership properties are kind of everywhere. It's not at all the case that any property could just be done as shared ownership. They're actually specific properties that have either been built to be shared ownership or have been designated by a housing association for the shared ownership scheme. What that does tend to mean is that whilst they can be a mix of houses and flats, it's much more common for shared ownership to be in flats. So it's just something to bear in mind if you're thinking of trying to get like a family home of 3 or 4 bedroom house, then you're probably going to be slightly more limited in where you would be able to get that in shared ownership. It tends to be more, they think of it as more sort of starter homes, so the first home as you're getting on the property ladder, and that tends to be kind of a lot of 1 and 2 bedroom flats. So just something to bear in mind. So if you're thinking about doing it, the first place you need to go, because there's an actual application process for shared ownership. So you need to go to the government's Help to Buy website. Like, it's quite confusing that they put it all on the Help to Buy website, but it does cover shared ownership as well. So if you go to helptobuy.gov.uk, there's a whole page there on shared ownership, and you're looking for the link that puts you in touch with the Help to Buy agent. So every area of the country has a Help to Buy agent, and they're responsible for managing the shared ownership scheme. So if you go onto the helptobuy.gov.uk site and you find your way to the Help to Buy, the shared ownership section, there's like an interactive map that will give you details of the Help to Buy agent in the area that you want to buy. So normally they have a website, and it explains on that website what the application process is for shared ownership, and it's kind of like a 2-step process. So the first step is really where they're checking your eligibility for shared ownership. So they'll go through the things that we just talked about. They'll check that you're a first-time buyer or an existing shared ownership property owner, or somebody who did have a property and can't afford to buy it. And then they're going to check your financial position. So you're going to need to tell them how much you earn, and you're going to need to give them details of your expenditure, so whatever you spend on a monthly basis, and any debts and things that you have. And the reason they do that is, they need to check whether you come within the financial limits for shared ownership, whether that joint income is under £80,000 or £90,000. But they're also doing an initial check to see whether you would be able to afford both the mortgage and the rent on your shared ownership property. So you go through that application process, and it's very, very easy thing to go through. You just need to provide that information. It normally takes about a week for them to confirm whether or not you're eligible. And then once they've confirmed that you are eligible for shared ownership, then you can actually start looking for a property. So the exciting bit, the bit that we all like to do. And there are a number of websites where you can find shared ownership properties. One is sharetobuy.com. Another one is propertybooking.co.uk. Both of those have thousands of shared ownership properties all across the country, so you should be able to find something. And actually also Zoopla and Rightmove both have shared ownership properties, and you can search specifically for them. So you find the place of your dreams, you found that £300,000 flat that we talked about in video 1, and you're really excited about buying it. So then what happens next? Well, because you're buying a shared ownership property and it's this part buy, part rent scheme, it's a slightly longer process than if you were just buying the property outright, because you've got two strands to it. You've got the mortgage side of things. So you're applying for a mortgage in the usual way. You're going to have to go through the bank's financial assessment. So you'll need to provide pay slips going back at least 3 to 6 months. You're going to need to provide proof of the savings that you've got for your deposit. You're going to need to provide bank statements showing how much money comes in and out of your account, and that will go back again about 3 or 6 months. And there may be some other things. They're going to ask you for proof of ID, and they might have some additional questions that they ask you. And so you need to apply for your mortgage. And at the same time, you're going to go through a similar financial assessment with the housing association. So you found the property that you want with the housing association, and so in order to kind of reserve it, you put down a reservation fee, and that's usually £200 or more, and that's just so they can effectively kind of take it off the market whilst you're going through their financial assessment. Now, you may be thinking, why do they need to do a financial assessment if your mortgage provider's already doing one? And that's a great question. But it's basically because you're going to be renting quite a lot of the property potentially for them. So in the example that we had from video 1, you were going to buy 40% and then you were going to rent 60%. So the housing association needs to make sure that you can afford to pay both the mortgage and the rent that you're going to be paying to them, because they don't want to be in a situation where you pay your mortgage but not your rent. I'm sure it happens. So they're going to take you through a very similar financial assessment as your mortgage lender, which is fine because you're going to have all of that documentation. You're going to know kind of what to do. So it's not extra stressful. It's just that you need to be prepared that you're going to be doing both of those at effectively the same time. So you go through your assessment with the mortgage provider, and you go through your assessment with the housing association's financial advisor, and hopefully everything's great and you get approved for your mortgage and you get approved by the housing association. And then you just, in the usual way, would work with a solicitor on the actual process of buying the property and then signing the housing association's documents, like your standard rental agreement with them. And so that's kind of it in terms of the eligibility and the application process. So in video 3, we're going to look a little bit more deeply at the benefits of shared ownership. So why would you think about doing it? And also, what are some of the things to watch out for? What are some of the things that are potentially challenging when it comes to shared ownership, and the things that you need to be aware of if you're considering it? So thanks very much for joining us for this video, and I look forward to seeing you in video 3.